So Cathie Wood has a really important message for all Dogecoin and crypto holders. Let's take a look at it. So here's what happened. On April 1, Cathie Wood's ARK Invest's Bitcoin spot ETF application got denied by the SEC. Now Cathie Wood knows how important it is for a price reversal for Bitcoin. And so she said that, "I find it fascinating they have approved the Bitcoin futures ETF and not the underlying. It just doesn't make sense to me, especially considering the fees associated with that kind of ETF." As I said, it's really important for the SEC to accept a new Bitcoin ETF. If you remember, in October when the SEC finally approved the first Bitcoin futures ETF, its price totally flipped. But still, it wasn't enough. We need a spot ETF for Bitcoin because it would bring in a flood of retail investors who are looking to get exposure to crypto but are too intimidated to buy it themselves from a crypto exchange. But that isn't even the big message from Cathie Wood. Her main message was that she still thinks Bitcoin can reach $1 million by 2030. She cited as her reasons the idea that Bitcoin will replace gold for many people, Bitcoin becoming the norm for remittances, and institutions allocating 2.5% into Bitcoin. And I think this message for crypto holders is extremely important because the fear in the market is rising exponentially. Before I talk about it, let's look at some really important data for Dogecoin. So according to a study conducted by various leading South Korean crypto trading platforms, residents in the country are mostly holding Dogecoin, Bitcoin, ETH, and Cardano. Basically, South Koreans are holding around $900 million worth of Dogecoin. Apart from this, they hold around $5 billion worth of Bitcoin, $4.8 billion worth of XRP, $4.5 billion worth of Ethereum, and about $1 billion worth of Cardano. I think it's pretty amazing that Dogecoin is their #1 choice when it comes to meme coins. Now coming back to ETF, there's some really good news that came out today. So 21 Shares has launched a Bitcoin and Gold ETP, which is the first combined ETP and will be trading on the SIX Swiss exchange. And this is a big deal because an ETP like this has several advantages. It also said that there had been an increase of 7 to 8% in returns based on backtesting. Also, this ETP will rebalance every month based on the historical volatility of the two assets in the last 360 days. The less volatile asset will have higher weighting to maximize the risk-weighted returns. While the fund is a combination of gold and Bitcoin, gold would be the dominant asset in the portfolio. At the launch of this fund, Bitcoin would account for 18.5% of the fund, while gold would be 81.5%. So I think this is a major step towards making crypto more legit in the common retail investor's eyes. Now coming back to the fear in the market and why Cathie Wood's comments were so important today, take a look at this. According to the latest weekly report from Arcane Research, the crypto market has now remained fearful for the third consecutive week. Here is a chart that shows the trend in the Bitcoin Fear and Greed Index over the past year. As you can see here, the Crypto Fear and Greed Index is currently showing a value of 27. This value is right on the edge of extreme fear, and the market has stayed around this value for the past few weeks. During that period, the indicator's value has also had some dips to extreme fear. The reason behind this trend may be the fact that Bitcoin has been stuck in consolidation for a while now, showing no real movement. Another proof that there's a lot of fear in the market is this. So the NBER conducted a face-to-face survey with 1,800 Salvadoran households during the month of February 2022. And this study says that despite legal tender status, Bitcoin is not a widely accepted medium of exchange in El Salvador. Most Salvadorans stopped using the Chivo wallet after getting their $30 Bitcoin bonus. The report shows that the median Chivo wallet user made no deposits or withdrawals in a given month. Now this just implies that these people are extremely scared of trading in Bitcoin, and I think it's because of how a lot of players are spreading FUD in the market. So a Bank of Canada official said that Bitcoin cannot be considered as a legit hedge against inflation, adding that these digital assets don't meet the test of a stable source of payment or value. Now it's these kinds of news that prevent the retail investors from holding their coins for the long term. And this is exactly the time when the whales start accumulating. So according to data by Santiment, large Bitcoin holders have yet again taken this opportunity to grow their bags. Wallets with 10,000 to 100,000 bitcoins are now holding 2% more bitcoins than before. Basically, this move not only puts a buying pressure of $1.6 billion on the market, but it also means big players are willing to snag BTC at a discount right now. The sad part is that even despite this buying pressure, the retail investors continue to sell. Let's quickly take a look at how the market is moving as opposed to the market sentiment. So the EMA14 of the taker-buy/sell ratio has been negative and recently retested the level of 1, suggesting that more sellers are willing to sell coins at a lower price and that selling pressure is stronger than the buying pressure. Meanwhile, the total number of coins held in the spot exchange has hit a 4-year low, and this is often considered a good sign in the fundamental on-chain activity. This might be a little confusing because even though the sentiment seems really positive, the price and data suggest that people are selling more often than they are buying. And as I said, it's all because of the fear that persists in the market. Now coming back to Cathie Wood, she's made another prediction for Ethereum, and it's a really bullish one. I want to remind you that Cathie Wood is the same person who in 2018 put a price target on Tesla that implied a $672 billion market cap. And at that point, this seemed impossible because Tesla's market cap was just $56 billion. We all know where Tesla is right now. The point is that Cathie Wood is really worth listening to. So a report from her company ARK Invest predicted that Ethereum could achieve a valuation of more than $20 trillion in the next 10 years, and that implies a 5,400% upside from its current price. So I think ETH might be a really good buy after all. Talking about predictions, another bold one came from Arthur Hayes, who's the former CEO of crypto derivatives giant BitMEX. He said that Bitcoin will cost $1 million by 2030, and he cited a number of reasons for this. He said that it is impossible for China to sell trillions of USD and euros worth of assets without destroying the global financial system. That hurts both the West and China equally and bigly. Therefore, the path of least destruction for those assets is to cease reinvesting maturing bonds back into the Western financial system. To the extent that China or its proxy state-owned banks can lighten up on Western equities and real estate without impacting the market, they will do so. And so the ECB is trapped, the EU is finished, and within the decade, we will be trading lira, drachmas, and Deutschmarks once more. And as the union disintegrates, money shall be printed in glorious quantities in a pantheon of different local currencies. Hyperinflation is not off the table, and again, as European savers smell what the rock is cooking, they will flee into hard assets like gold and Bitcoin. The breakup of the EU is equal to $1 million for Bitcoin. Now I think this is a really bold prediction by any standard. Do you think Bitcoin can get there in 8 years? Let me know in the comments section below. Now let's talk about some really good news that came out today. Usk Homes is offering U.S. homebuyers DeFi mortgages, enabling users to purchase homes using crypto without having to first liquidate them. The project currently allows Texas residents to secure crypto mortgages, but plans to expand its offering to other states soon as well. Basically, homebuyers can borrow up to $5 million using Usk Homes, which comes at a 5.5% interest rate and requires a 20% down payment. Another great news came from Binance. So Binance is launching a crypto payments card for Ukrainians fleeing their country during Russia's invasion. The free Binance Refugee Crypto Card is for all current and new Binance users from Ukraine who've been forced to move to Europe because of the war in Ukraine. Displaced Ukrainians can use the card to make or receive crypto payments and make purchases at EE or retailers that accept card payments. I think news like this creates a lot of goodwill for cryptos, so it's pretty great. And another great news came from Fidelity Investments. If you don't know, Fidelity is America's largest provider of 401k savings accounts, and it is rolling out the digital assets account. This will enable companies to give its employees access to Bitcoin in their retirement plans. And after this announcement, MicroStrategy hopped on very quickly. The firm will be the first company to give employees the chance to add Bitcoin to 401k savings accounts. Now let's come back to Dogecoin. Even at 13.8 cents, 58% of Dogecoin holders are in profit. Now, even though the correlation with Bitcoin stands at less than 0.5, I'm still fairly optimistic about where it's going because of Elon Musk's support for Dogecoin. Do you think we'll reach 20 cents by the end of this week? Let me know in the comments section below.